What's up, guys? Hope you guys are all doing well. Different bit of different scenery here. I do have my face cam on. I do want to start doing, well, one, this is going to be on YouTube. This series, I don't know if you want to call it a series, but I am going to start uploading more on YouTube and kind of diving deep into the trading session, if you will. And kind of outline the technicals and kind of what I was looking at throughout the trading session. But before we do that, I do want to start out kind of just going through the dashboard on the site. And so I give myself one, an understanding where the market's currently at and the trends we're seeing, but two, give you guys an idea of where the markets are at. And don't mind my hair. I know it is, I need a haircut. That is something I do have on my to-do list, hopefully within the next week. I've just been so busy working on the site and everything else, my trading, kind of just all over the place. Okay, so let's kind of go into the site. Again, primarytrading.com. This has kind of been something I've really been focusing on. If you're new, if this is your first time kind of on the YouTube channel, you just sign up. Again, you do have to sign up to look at the features, but it's free. And you can see kind of the latest market outlook report here. Again, this is the latest report I put out yesterday on Monday, kind of just talking about my thoughts on the market and everything like that. Okay, so I don't know why there's something I need to fix here as well. That never, actually no, it does show it. Yeah, when you hover, it shows the price. Okay, good. So that's that. So this is the market outlook I put here, but that's not what we're going to go over. I want to go over the dashboard. All right, so when we look at the dashboard here on the market overview, let's look at the daily changes here. So ES is pretty much even on the day, down 0.12% on the day. NASDAQ down 0.5%. So we're seeing that continued kind of tech weakness. That has a lot to do with kind of the disconnect, in my opinion, between software and between kind of the disruption that AI has played. Yesterday, Claude, Anthropic came out and announced a new feature like they're doing every 2 weeks. And that has put a lot of pressure on a lot of companies because Anthropic, Claude is building a lot of hype behind AI doing all this stuff for you. And it kind of beats the purpose of having all this software and paying a bunch of money for the software when you can just pull up LLM model and talk to it and get it to do it for you and pretty much be all these software apps in just a conversation. So that has put a lot of pressure on companies and on, Max 7 companies and also, I guess, smaller tech companies as well, and just a bunch of software companies. And that's one thing I do want to take note of. I want to take a look at the Max 7. Take a look at the Max 7 here. The Max 7, technically, in my opinion, and it's not really my opinion, it's just on the chart as well. On the daily chart, you can argue has been in a bear market. The trend has been lower. Obviously, you go to the weekly chart and we kind of look at what the Max 7 has been doing. You had some downside move in July 2024. What was this move here? Let me pull up highlighters and kind of see what I'm looking at here. Pulling up the highlighter. So this move here back in July, August, this was due to the Japan yen carry trade. Put a lot of pressure on markets. People having to sell their positions to cover. And that put a lot of pressure on all risk markets, not just obviously the Max 7. And then we had the December, January, February, March, April kind of big move down. This second half of this move was because of tariffs, and you started to get that move before then. And then obviously you had Trump kind of back out of a lot of that, and the markets rallied, right? And traded back up to the 2024 high. And then continue to rip higher. And then since October, you kind of have seen the Max 7 and big tech and software kind of struggle. And that has a lot to do with AI. And obviously it's kind of weird because it's kind of contradictory in a sense. It's like AI should be helping these companies, which it has been. That's been the main reason the NASDAQ and the S&P 500 has been trading higher the last few years. And this is the S&P 500. This is kind of my daily chart annotations that I'm looking at on the daily chart, as you do have a divergence here with the S&P and the Dow that formed on January 28th. So what this means in simple terms is the NASDAQ saw a rally from January 20th to 28th, but it failed to run the all-time high price back in October. But the S&P and the Dow Jones index, if we go to the S&P, you can see ran that all-time high price, and the Dow Jones index saw some strength during that time and continued to run all-time high. So you started to see that tech weakness and not as much as inflow of liquidity in this market compared to the S&P and the Dow Jones index during that time, which can hint to a potential reversal, but it's not a guarantee that you are going to get that potential reversal. So that is something to keep in mind. But then you started to get a breakdown, and then we started to look for this previous 3-month bar low, and that played out very well. And the daily structure continues to look pretty weak from here. So I would say overall, I do think it's kind of a hard read right now for me, because in my view, I view the tech market as a market that I want to be bullish on, and I think AI will continue to be something that keeps that market from, severely crashing lower. I think AI is going to continue to play a big part in these big rallies. Like, you're just not going to sell off. You're going to see big spikes in the market. You go back to any time where the market had a downturn. I mean, you can just go to recently, back in March, or not recently, but technically a year ago, which is kind of crazy. That feels like the tariff stuff was recently, but this was pretty much a year ago. Time, I guess, flew by. That is actually crazy now thinking about it. You go back to a year ago when you had the tariff stuff going on. You had big rallies like prior to this big move down. I mean, this is in 3 days. This is a 1,000-point rally. Obviously, recently you've been getting 1,000-point daily candles. This is a 990-point daily range, which is absolutely crazy. But I guess the idea that I would kind of pay attention to is, okay, is the MAC 7 going to find some sort of support? Like, if we pull up that MAC 7 chart and we look at the weekly chart, the MAC 7 is trading back down to the 2024 highs, that December high, right? Where if you take a look at the NASDAQ is not really there yet. The ES is not there yet, right? You're getting close, but you're just not there yet. So do we start to see support on the MAC 7? If so, then I do think that could lead to like a short-term rally in the market, where maybe on the daily chart you do come up and you do form some sort of swing high before maybe continuing lower. That's something, and I know this video, I wanted to make it kind of more on the lower time frames, but it is important to understand the daily chart and kind of where we're at. So that's my view on the daily. There's really a disconnect right now between the MAC 7 and the overall market. The MAC 7 has gotten hit pretty hard. NVIDIA has been holding up pretty well, but the others, I mean, Amazon has gotten hit very, very hard. Meta has gotten hit very, very hard. Microsoft, I think one has gotten hit very, very hard. Yeah, Microsoft. I think Microsoft looks like, I think it is the one that has gotten hit the hardest. So there's a very, very big disconnect right now with the markets. And year to date, I mean, when it comes to sector performance, energy is kind of the only one that's been doing decently well. I mean, you have materials, but energy has been obviously a big factor in seeing gains this year. Year to date, technology down 5%, communication services 5%, healthcare down 6%, consumer discretionary down 7%, financials down 9.71%. And this has a lot to do with AI, because a lot of this financial software, they charge you a lot, but it's like, why don't I just get AI to make my own, kind of be my own financial buddy, right? So, and then obviously energy playing year to date, most of the gains are in the last, 1/3 of the gains in the last month, but a lot of the gains last 3 months. I guess we're only 3 months into 2026, so I guess that makes sense. But with the oil crisis going on and oil spiking, a lot of energy doing well off of that. So going back to here, kind of looking at what's up on the day, down on the day. ES, NASDAQ, both down on the day. Currently, the Dow up 0.09%. The Russell is interesting, right? The Russell is interesting because you would expect, if the market is going to be risk off, you would expect the Russell to be one that gets hit pretty hard, right? Like during risk-off environments, the Russell gets hit very, very hard because it's small caps. Small caps are going to be more volatile during extreme times in the market, right? When the VIX is trading higher. An example of that is 2020. Russell went down 37%. Another example of that is during 2021. The Russell got hit very hard, down 30% because of inflation. The Russell did very good after COVID because of the lower interest rates and the constant cuts after that, and stimulus checks playing a part in that. Another example here, this was due to the tariffs, down 31%. But recently, look at the daily chart compared to the Russell and the ES. And again, I know I said I was going to dive more into the daily technicals, but I think this is kind of important to pay attention to as well. When you look at the daily chart here, look at the daily, right? To me, the Russell actually looks like it's starting to form some sort of base. And I think small caps will definitely be something to pay attention to, especially with, in my view, not just my view, but a lot of other people's view as well. I'm going to go to the dashboard and we'll pull up this. Core CPI is falling, right? And that's going to benefit small caps, right? Obviously, it's a different story when you go to headline inflation. Headline inflation is rising, but that has a lot to do with the macro view of things and how that market's looking right now, or not market, but how that, I guess, side of the economy is looking right now, the, I guess, bigger picture. But core is falling, and that's going to lower inflation is going to lead to potential more rate cuts in the future. Now, do I think in the short term? Obviously, no. There's a lot of speculation of potentially rate hikes, potentially with this oil spike. I don't think you get that. But bigger picture, thinking 2, 3, 4, 5 years down the road, more likely than not, you're going to get more cuts. Inflation is looking to lower, and that's going to benefit, whether inflation lowers to the target that the Fed wants or inflation is going to lower in general. I mean, that's going to benefit small caps, and that's going to give you that lower interest rate to allow these small caps to borrow. Because with higher rates, it becomes, they can't borrow. You can borrow, but now you have a higher rate. So with that projection, that plays a big part in what we're seeing right now. Obviously, the Russell is not immune to selling off. If you look at the S&P 500, when the S&P formed the top, we'll look at the top here. The S&P formed the top right here in January 28th, and we take a look at that same level here on the Russell. Again, I don't necessarily like comparing these two. I usually like comparing, when it comes to like the charts like this, I like having the NASDAQ ES side by side, but this is important to understand, okay, we're seeing a sell-off, but what market is not selling off as hard? What market is seeing kind of an inflow? What market is printing a bull daily bar while the main market, the S&P ES futures, is printing a current bear bar, right? And that's going to be the Russell right now, which reclaimed above the open is a bull bar now. So when you look at the sell-off, obviously the Russell started to sell off around when the S&P started to sell off, but it just hasn't been as extreme. Percent-wise, from the high to the low, the Russell traded down 12%. From the high to the low of the S&P, 8%. So obviously the Russell is going, percent-wise, is going to trade down more. That's just how the Russell works. But when you look at the structure, I mean, this just looks like a stronger market. And in my opinion, I think it's going to be a market that, bigger picture, I do think you'll see that outperformance next 3, 6, 12 months down the road, next year, next 2 years, next 3 years, etc., compared to the S&P 500. You can compare the two, right? If you want to pull up Russell ES, this is kind of the ratio you can see. So you can see the Russell has been outperforming, and I do think this will continue. You can see on the month it is outperforming as well, but pretty much formed a bottom here in 2022 and has been outperforming the S&P since then. Bigger picture though, if you go to the 12-month, there's been times where there is underperformance with the Russell, right? And that's during those big drops, back in 98, 99, 2000, underperformance there where ES held up a lot better. Here, 06, 07, 08, underperformance there, right? But the last few years, and I do think this continues, and I think you probably get all the way back up to the 97 high. I think you continue to see that outperformance with the Russell. But obviously, that does not mean it's immune to not seeing short-term underperformance. That does occur. And again, we talked about that scenario back in 2021, 2022 during that inflation crisis that occurred because of COVID, lower inflation stimulus checks that ramped up inflation. The Russell took a big hit there, and you could see the underperformance there, where the Russell sold off. ES and the Russell both sold off, but the ratio here with Russell compared to ES turned negative and flipped there. So even though the markets have overall traded lower, the Russell is technically still outperforming. So I think that is something to pay attention to. Emerging markets is something to pay attention to as well. And we can see here today, emerging markets down, though, on the day 0.9%. International markets down 0.39%. That has a lot to do with the dollar index. So if we pull up the dollar index, here's kind of my chart I'm looking at on the dollar index. And this is something I posted in the report as well. The dollar, I think the dollar continues to trade lower. I think you continue to see downside move in the dollar that brings you all the way back down to your 2021, 2022 lows. But short term, you're going to get catalysts that push dollar higher. I would like to see dollar stay below the previous year low. But, why have we seen this rally in dollar? Is it because inflation is shooting up and the U.S. economy is doing good? No, it's not, right? That was a big reason back in, I guess in bigger picture, back in 2024, you can argue during this run here in 2021, 2022, this had a lot to do with, well, not argue, this was the main reason, with inflation, right? Inflation going higher, interest rates going higher, dollar going higher, right? Yields going higher with that. So this move has less to do, in my opinion, with inflation, more to do with the tensions in Iran and the U.S. And when it comes to a risk-off asset to flee to, dollar is your best option right now, because dollar technically has sold off since pretty much Trump got in office. Trump's policies and his administration, how their standpoint on things, they won't lower rates. So dollar sold off a lot because of that narrative and that story. And because of that, dollar selling off, gold and silver have ramped up aggressively. So those kind of risk-off assets already had a run. So it's like, where else do we go to? And dollar has kind of played that part in recent times, because a lot of people have gotten confused with gold recently, seeing a big sell-off. You can see here on the daily chart, gold during this heightened tension in the Middle East and the geopolitical tensions has sold off, right? Has sold off, where dollar has traded higher. I think that has a lot to do with pricing in, valuations, etc. Obviously, gold doesn't like the inflation talk, so like gold and oil usually trade inversely. Like if you're having potential spikes in oil, that's going to cause short-term inflation spikes, which gold's not going to like that. So that plays a part there. But gold is typically viewed as like a risk-off asset, but it's been trading higher the last few months. So short-term, dollar has played that part, and obviously when you get a risk-off environment and there's assets being sold, when U.S. stocks are being sold, when people are selling out of ETFs, where does that liquidity go? It goes into dollar. You're selling those assets to get dollar back, right? So dollar has played a very big part in that, and obviously a rise in dollar is going to cause, if we go to EEM here, which is the emerging index fund, is going to hurt emerging markets, right? Another kind of emerging market I like is AFK. AFK has not been very good lately, and it has been the last few weeks with metals doing well. But AFK is pretty heavy in metals and pretty heavy, obviously, is a market that trades much better when dollar's trading lower. But dollar's been going higher and metals have been going lower. So AFK has not been a market that has been performing very well. Still up, obviously, year to date. Actually, no, year to date is down, but still up over a lot last 2-3 years, forming that bottom back in 2024. It is a market I still like, but with the higher dollar and metals seeing that correction, AFK is going to take a hit because of that. But I do think emerging markets is definitely going to be a sector to pay attention to, because I do think dollar trades lower. Bigger picture, I do think the U.S. is losing a lot of that growth that it had. And I think you start to see that story continue to develop. But obviously, I think a correction was due. I mean, if you take a look at the emerging markets chart, look at the monthly chart. I mean, this isn't crazy. Right? If we just zoom out here, I wouldn't say this type of move is crazy. And emerging markets have outperformed since the tariff low. Right? They have outperformed. Emerging markets, we can just look at it year to date. Look at the year to date here. Right? Year to date, NASDAQ, Dow, Russell down, ES down, emerging markets up 1% on the year. Right? Obviously, it's not a lot, but with everything going on, everything else is down year to date. Emerging markets up. Obviously, gold's up year to date. Gave back a lot of gains though, and then dollar going to be up year to date with the risk off. All right, so that's kind of, I guess, my overview on the market. Everything I wanted to go over, kind of the trends we're seeing. I think that's important to understand. Take a look at the Nasdaq today. It's a much smaller trading range, 373 points compared to the previous trading session range. So if we look at the daily chart, usually if you get a big trading range, the next following trading day, you can probably expect a lower trading range. So take that into consideration when you're trading the markets, especially when you get a move like this. I do want to show something on my X feed that I posted about, and this is something I posted about. Actually, I'll just show it on here. If you go to research, or you can go to the dashboard, and we go to this is news here, but let's go to my report. I put, this is something that happened yesterday. So Friday we can open this. Friday we saw the largest down volume day ever in the New York Stock Exchange history. Okay. The following Monday, you saw the highest up volume ever in New York Stock Exchange history. Okay. So that tells you, obviously, the markets are volatile, and tells you as well, this is a trader's market. I think if you're going into this market trying to figure out where to invest your money and you're expecting gains, I would be careful. I think this is more of a trader's market, but this is something I found very interesting. And the reason I'm talking about this now is we're going to start talking about the price action. Yesterday at 7 a.m., the ES 5-minute chart, a 5-minute bar, went up 3.4%. That's a 221-point move in the S&P 500. And I was just doing some research on kind of because I like statistics. I like understand the probability and the likelihood of something happening. That is roughly a 1 in 50,000 to 1 in 100,000 5-minute bars. Right, so that's pretty much a once in a decade to once in a generation event, which is just insane. And this came off of Trump coming out and saying, I think I talked about it here. Maybe I didn't. Trump coming out and saying the U.S. and Iran have had productive discussions, and the market shot up a lot from that. So obviously, I think it's very important to be on side of the market, but there's going to be times where you're not on side of the market, and you have to understand the risk. So before I dive into the charts, please understand your risk in these markets and the current environment we're in. We're in an environment where the administration and the president can put out, something they said. Maybe they're on an interview. Maybe they put something on X or Truth Social, and the markets react like this. Obviously, I don't think you get another reaction like this on the 5-minute chart. You can see in one 5-minute bar, the NASDAQ went up 3.7%. I would be very surprised if you get that statistically. I just don't think that is possible, but you never know. But imagine you were offside on this. So you do have to understand before you enter trades, before any sort of technical analysis, for any sort of fundamental analysis, you have to understand the type of market that we're in currently. And it's a very high risk, high volatility, high headline driven market where you can be up one day, up in one 5-minute bar. I mean, this just shows you here. Imagine you were short here, or maybe you shorted at 6:15. Well, 45 minutes later, you're up money. Well, I guess you can argue at 6:45 you're up. The next 5-minute bar, you're offside 1,000 points. So 800 points. So you have to understand that risk. That does not mean you know, don't place a stop loss, but rather than placing your stop loss or not having stop loss at all, you know, at least place a stop loss. Place a hard stop. I like calling it a hard stop. Don't place a stop loss where you're only risking, you know, 2 points to try to make 500, like a lot of people do. At the end of the day, you may have successful trades, but statistically, you're actually going to lose money in the long run. That is not a profitable, you know, plus EV strategy that gives you an edge. If you don't leave yourself breathing room for the markets to be random, because the markets are random, then you're not going to make money. There'll be times where you do make money, but that just gets into your head and you think you're making money. In reality, you're not, right? You know, if you're making money is if you're able to survive in the markets for 3 months, 6 months, 12 months, a year, 2 years. You don't make money, or you shouldn't think you're making money because you had a good trading day or trading week. If that, you know, if you make money that trading day or trading week and that pushes on and you continue to make money consistently and your equity curve, you know, looks something like, you know, this over, you know, a few months to a year, then you can talk and say, yeah, I think probability, statistically, I probably have a plus EV strategy in the way I'm trading, right? Rather than, oh, a few trading days, I'm making money. A lot of people saying they have, you know, plus EV strategy, and then you get that, right? And this is what these type of days happen to a lot of people here. All right, so let's go into the trading day and talk about kind of what I was looking at on the market open. Again, I am going to do analysis on the NASDAQ. This kind of compares to the ES. I'll go over the ES as well. I'll have that on the side. But let's go over the NASDAQ here. So let's start with the 5-minute chart and look at the daily open of the New York Exchange, New York Stock Exchange open, which happens at 9:30. So this is bar 1, right? And I do have an indicator. I made this indicator. You can probably find another indicator on here. If you want to look it up, you know, it's under bar count from 9:30 open. There's plenty of them on TradingView, though, and you can make your own as well. So at 9:30, you had bar 1. This is bar 1 at 9:30. Bar 1, what bar 1 did is it traded higher, and then it traded above this 835 high and this 850 high, right? So you kind of had a triple top here where the market traded higher at 9:30. The bar 2 failed to run the bar 1 high. All right, so buyers were not able to get bar 2 above the bar 1. But if you take a look at the ES and we take a look at the ES bar 1, bar 2 actually traded above bar 1 high. So bar 1 came up, sellers stepped in above bar 1 high. That is a pretty good area. I did not short this, but that's a good area to look for potential short opportunities to take you down to, you know, low of day and continue. So the market continued to sell off. You got bar 2, bar 3, bar 4, were 3 bear consecutive bars. And this is where a lot of people get trapped. They see, oh, 3 consecutive bars, let me enter short the market. You know, the market looks like it's displacing lower, 3 consecutive bars. There's no way this full-on reverses. Well, you never know, right? And with the large expansion day we had yesterday with this huge 1,000-point trading range, the likelihood that this whole move gets reversed the next day is statistically unlikely, right? So seeing that 3 consecutive bar, I started to look for a potential long entry. And this was all documented in the Discord. If you want to join the Discord, just go to the site. It'll also be in the description, but on the site, go to the homepage, top right, join the Discord. Okay. Let me make sure. I think that changed. So I'm just looking at my site. I was supposed to have, I don't know if that changed or not. I think kind of something I wanted got removed on the site. I'll fix that. But going back to the charts, so 3 consecutive bear bars down, and then look at bar, this is when we started to find support here, and kind of how I identify support. So bar 3 had a pretty big wick to the downside. All right, so at the low of 24,137.75, buyers stepped in here. That's where you printed that bar 3 low. Bar 4 came up and ran bar 3 high, and then started to get a move back down to bar 3 low, and then here's the move here. Bar 5 traded down to bar 3, tick that same level where you found previous support that created this wick, and you got a bull bar close back above, right? So that's when I started to look for longs, and that's where I entered longs on the NASDAQ. Okay, and then you had a bar 5, bull bar close, bar 6, very clean bull bar close. So if you were long, you can most likely put a stop underneath that bar 6 low. You can keep it underneath here. So how I was doing this is I had a long entry here. In my stop, I did not really have a clear stop. I had a hard stop all the way down here, but I didn't have like a a 2-tick, 3-tick, 1 point, 2 point, 3 point, 4 point stop on the Nasdaq, just because I wanted to risk a little amount of money. No, I had a hard stop. I don't know where exactly the market could have traded all the way down here and then reversed that bull bar and closed the back above still. I don't know. You never know, right? So I had a hard stop around here. It was probably around, I think it was around the 100 mark. Yeah, I think 24,100. But I didn't have like a 2 point, 3 point, 10 point stop. I gave myself breathing room, and I was comfortable with that. So once you got this bar 6 very strong bull bar close, that gives you an area to potentially move your stops and trail this thing. I did get out though around this bar 8. Obviously, in hindsight, it traded higher. Ultimately, it did eventually come back down, and even traded down to the bar 6 low. You can see here at bar 51 on the 5-minute chart. But I did get out of this trade on pretty much bar 8. So entered on bar 5, got out on bar 8. So that was like a 15-minute trade. This did end up trading higher. In the Discord, I actually was looking to hold this trade until ES traded up into the 930 high, back above kind of the swing high here, which you can see bar 8 did that on ES. It's just I got trailed and stopped out on my position on the Nasdaq. Again, I was trading M and Q. I know I'm doing analysis on the Nasdaq in Q futures, but that was kind of what I was doing there. So that is kind of my daily analysis of what I was looking at. So you had a bar 1 open above the 850 high. Bar 2 failed to run the bar 1 high, but ES did. So that indicates, potential Nasdaq weakness. Bar 2, 3, 4, strong bear bars. Bar 5, getting people sell short, trapping shorts, closing back inside the range. And then you get bar 6, 7, 8, pretty strong bull bars, getting in long at bar 5 to take us up. I wanted to get a move above here, but I got trailed out on bar 8. All right. So that is that. All right. So I just want to go over that analysis there. And again, hopefully you guys kind of enjoyed everything. Hopefully, I do want to make the production better. That's why I wanted to have my face cam on as well, kind of be more personal with you guys. And hopefully you guys are enjoying the site as well. Again, some things I'm working on the site every single day to kind of make it more useful for me, but also for you guys. All right, guys. Hopefully you guys enjoyed. If you have any questions at all, leave them down in the comments. And I hope you guys have a great rest of your week. And I'll be sure to stay active on the site, as there is a chat function on here. I do post in here, but also in the Discord as well. All right, guys. Take care.